from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Beijing taking steps to take state control of Didi, the world's biggest ride-hailer, publicly traded in the U.S. Just how far will President Xi's campaign to redistribute wealth and limit the dominance of the tech sector go? We'll discuss. Plus, will Lake Tahoe be saved? Firefighters say there's a growing chance they may prevent a massive wildfire from reaching one of the most iconic landmarks in Northern California. We will talk to a teenager who's built a fire tracking bot to help stop the next big fire before it gets out of control. And Bitcoin Beach, how a small surf town in El Salvador has become a literal hotspot for crypto innovation ahead of the country's big decision to make Bitcoin legal tender. We'll take you there. All that in a moment, but first, markets didn't know which way to go after the release of the latest jobs report in the U.S. Hiring slowed abruptly in August with the smallest job gains in 7 months. So many industries have been impacted by the spreading Delta variant and persistent hiring challenges that come with it. Here's President Biden earlier.
There's no question the Delta variant is why today's job report isn't stronger. I know people were looking, and I was hoping for a higher number. But next week, I'll lay out the next steps that we're going to need to combat the Delta variant, to address some of those fears and concerns.
Following those remarks, the White House unveiled a $65 billion plan to prepare for future pandemic threats. The proposal focuses on protecting the U.S. against biological threats, either naturally occurring, accidental, or deliberate. All of this added up to a lot for investors to digest. Let's see how it played out in the markets this Friday with our Kriti Gupta. Kriti, take it away.
Well, Emily, it was a risk-off session, of course, coming off of that disappointing payrolls report. Just about 230,000 jobs really reported. Once again, the estimate was 730,000 over, I should say. So immediately you saw that haven bid right into big tech, some money going into treasuries initially and then coming out. The real story, though, I want to focus is China. Zoom out the chart and you can really see where big tech and Chinese tech in the U.S. and China really diverge. That's going to be the key story. Once again, you can see they were trading together, and now some flows coming out of China into the U.S. And that really showed up in intraday trading for some single security stocks. Of course, we know that Shanghai is trying to actually bring, I should say, the Shanghai government and the Shanghai exchanges are starting to actually come in and bring down or tighten some of those restrictions on offshore listings. The stark difference was Didi, of course, rising above all of those other Chinese ADRs, really having to do a lot with that potential state-run investment, Emily.
All right, Kriti, thanks so much. We're going to talk about that a bit more now. Another twist in China's latest crackdown on tech companies. Beijing's city government has proposed an investment in Didi that would give state-run companies control of the world's largest ride-hailer. It is unclear how large the stake would be and whether it'll be approved by top government officials. Didi is currently controlled by its co-founder, Cheng Wei, and President Jean Liu. Their voting power adds up to about 58%. Since the company went public in the U.S. For more, I'm joined by Anya Manuel, co-founder and partner at Rice Hadley Gates and Manuel, and Xiaomeng Liu, director of geotechnology at the Eurasia Group. Ladies, thank you so much for joining us. Anya, I want to start with you. We saw the Chinese government do something similar with ByteDance, of course, the parent company of TikTok. What exactly do you expect to happen here?
I think this Didi proposed takeover is a predictable continuation of Chinese policy. We don't quite know yet. It sounds like they're talking about having a state-owned enterprise invest, take a golden share, take some board seats. This is really par for the course. Xi Jinping has been very clear. Chinese tech companies should serve patriotic Chinese objectives. Now, the problem is that in doing that, he's in danger of strangling the goose that laid the golden egg.
Right. Xiaomeng, this is a company with public investors from around the world. Some of these investors include Uber, SoftBank, which have big minority stakes in Didi. What does this mean for them?
This means that the Chinese government is tightening control over a platform company. You look at what Didi is going through and what ByteDance need to do to follow the same content rule as traditional media. And recent development around restructure means that company should act like a licensed credit agency. This is a trend towards standardization of not only regulatory, but also ownership practices between digital and traditional industry in China, a sign of rising political pressure for the platform sector.
Now, Anya, Xi Jinping says he wants to redistribute wealth to limit the dominance of the tech sector. But where will this stop? What other companies do you expect to be affected?
I'm not sure where it'll stop. And I think the entire tech sector of China is going to be affected here. The Chinese government has been very clear. In August, they laid out a 5-year plan outlining tighter regulation of the economy, especially technology. Some of that makes a lot of sense. The tech companies in China have had very few regulations. So now you've got anti-monopoly, you have data protection, all sorts of things that you can go into. But of course, the second reason they're doing this is to reinforce tighter political Communist Party control. And I do think that this trend is going to continue. This Didi situation is not a one-off.
Well, and there's an Alibaba situation as well. Alibaba has, of course, also been under regulatory scrutiny, just made a big $15 billion donation to this campaign by President Xi. Xiaomeng, what is your take on that? Is that Alibaba trying to pay off or curry favor with the Chinese government?
Alibaba's donation is representative of Chinese tech industry's response to this changing political environment we just talked about. Its peers such as Tencent, Meituan, and Pinduoduo have all made similar moves to proactively respond to the political calling for redistribution of wealth. The fear is that if they don't take self-corrective actions now, harsher regulation will come down the pike. This could be tax reform, new labor rules, foreign investment restrictions. These options are all available on the table.
Now, Anya, you used to work at the U.S. State Department. How do you think this is all being received in Washington?
Well, I think the U.S. is watching the U.S. China tech competition very carefully. You've seen a lot of moves by the U.S. government to make ourselves more competitive. There is a law winding itself through a U.S. Congress called the Innovation and Competition Act that would vastly step up U.S. investment in our own research and development. Part of that is the CHIPS Act that gives a lot of subsidies to semiconductors. So I think the U.S. government is watching this very closely. But these Chinese internet companies are directly related to our national security. So I think they're watching it in the sense that U.S.-China policy is at the forefront. But of course, Didi, ByteDance, others don't directly impact our national security.
Well, and so how do you think this could impact U.S.-China policy, the U.S.-China relationship?
It's just part of the tech decoupling, and you can see that it's happening on both sides. It's not just the U.S. You know, the Communist Party wants tighter control, and you've seen 50 new regulations by the Chinese just in the last few months. Antitrust, Alibaba was fined. Tencent was told to end its exclusive music licensing. There's a new personal information protection law, which will make it really hard for Chinese companies to export any data abroad. There was a crackdown on internet tutoring. So you really see China decoupling, especially from the West, in terms of its technology. And that's a trend that will continue.
Xiaomeng, give us the view on what's happening inside China right now. If you're a Chinese entrepreneur, you're running a Chinese startup, are you panicking right now?
I think for the bigger companies, they're realizing, in a way, the winter is coming. Their business environment has changed forever. And this is not a short period. It's likely a prolonged process that will last for a few years. But I think for the smaller and small, medium-sized companies, Xi Jinping kind of have addressed to this audience and telling them he's going to set up a new trading board in Beijing pretty recently and promise further openings in the service sector to give opportunities to the smaller guys. I think that's the kind of government move that they are designed to ease market concern and present new opportunities for the smaller players in the industry.
All right, fascinating to watch how this is playing out. We'll continue to follow it. Of course, Eurasia Group, Xiaomeng Lu, as well as Anya Manuel. Thank you both so much for joining us. Let's bring you an update now on a story we have been following. Apple deciding to delay a new feature that would have scanned customer photos for signs of child sex abuse. The company had announced the system in early August, along with other tools meant to protect children, but Apple faced intense criticism from privacy advocates concerned the measures could set the stage for other forms of tracking. Apple says it's taking additional time to, quote, collect input and make improvements before releasing these critically important child safety features, they say. All right, we'll have more on Apple after the break when we talk about the future of its deal with Google, as the default search engine for iOS could now be the time for Apple to start its own search engine. We'll debate that next. This is Bloomberg. Ride-hailing company Lyft says it will fully cover legal fees for drivers sued under a new law in Texas that outlaws most abortions in the state. Company CEO Logan Green said in a tweet the law threatens to punish drivers for getting people where they need to go, especially women exercising their right to choose, adding that this is an attack on women's access to health care and on their right to choose. The company also announced it's donating $1 million to Planned Parenthood. Well, for years, Apple has benefited from a lucrative deal in which Alphabet's Google pays the iPhone maker billions of dollars to be the default search engine on iOS devices. But as antitrust scrutiny of big tech companies intensifies, can this arrangement between two tech titans survive? That's the topic of a column by Bloomberg Opinion's Tae Kim, who joins us now from New York. So, Tae, first of all, give us a little history lesson on this deal between Apple and Google. A lot of people don't realize this is why their iPhones operate the way that they do. Talk to us about how it works.
So Google pays Apple billions of dollars a year to be the default search engine on iOS devices. So when you go to Safari, when you search for something, Google is the default search engine. And the numbers are just getting too outrageous. Bernstein last week had this great report where they ran the numbers and found that Google was going to pay Apple about $15 billion this year and rising as much as $20 billion next year. So I think the numbers in this world of rising antitrust scrutiny, as we said, just simply aren't tenable. Last October, this distribution deal between Google and Apple was the centerpiece of the Department of Justice antitrust lawsuit against Google. And once that gets to court, I just don't see how it can last.
You point out that there's an antitrust problem here. Why is that if both Apple and Google, two competitors, are involved?
Well, they're kind of competitors, but in search they're not. So if Google is paying Apple like $15 billion, say, this year, I mean, there's no way for a small startup that does search to get that kind of distribution. And this is like massive distribution. We're talking over 1 billion people using iPhones. So this is a huge advantage for Google, and they already have a monopoly on their search business at over 90% market share. So I just don't see how this is tenable in this world where of antitrust, and this is a clear example of a powerful company like Google using their financial might to kind of maintain their dominance in one key market.
You make the suggestion that Apple should start its own search engine, which is certainly provocative. Why do you think that's the solution? And certainly, it's not so easy to do, given that Google has been building these algorithms for more than 20 years.
Yes, they've been hiring a lot of search and AI people actually from Google, but it's such a great opportunity for Apple. This thing can be a blessing in disguise. If you think about it, Bernstein estimates that Google makes $50 billion from iOS users, so why not go after that market? It's such a big market, and it's one of the few things where Apple can go at that's going to move the needle. They're a multi-trillion-dollar company. And if you think about it, it's also software and services. So a lot of the engineering that Apple does can be relatable, and it's the same kind of expertise. So it's it's a huge market that they can attack, tens of billions of dollars, software services, any capabilities they can invest here, they can transfer into other areas that make iPhones more attractive. And also, like I said, in this antitrust world, I don't think this lasts. So they might as well get ahead of it and go attack this market.
Do you imagine that Apple would do search differently than Google? I mean, perhaps in a more pro-privacy kind of way?
So I point this out in my column, like Tim Cook and Apple love to go out there and say, we put privacy first, we're a privacy first company. But then at the same time, they're taking all this money from Google and offering up Apple's users to be used by Google for all the digital advertising and kind of invasive privacy stuff that they blast. So in a way, they can live up to their principles by creating a search engine that has more privacy protections. And all this kind of talk about, oh, we're only privacy focused, they can live up to their principles.
All right, Bloomberg opinion columnist, take him. Provocative piece you have out today. You can check it out at Bloomberg.com. Thanks so much. Coming up, I'm going to speak with Antonio Neri, CEO of Hewlett-Packard Enterprise, how his company is responding to the shift to remote work, the chip shortage, and more, plus his plans to convert HPE customers into subscribers. That's next. This is Bloomberg. Hewlett-Packard Enterprise out with earnings as supply constraints in semiconductors and other component parts continue to rock the industry. But increased demand from the shift to remote work has created an opportunity for HPE, according to CEO Antonio Neri. Following a trend from other hardware makers, he is working to convert HPE customers into a subscriber model for some of its services. Antonio Neri joining us now. So, Antonio, talk to us about how the continuing demand for remote work as the pandemic drags on is impacting HPE.
Well, hi, Emily. Actually, I would like to start by saying we had an impressive quarter driven by the demand, and I'm just reading there the headline, and actually, I don't agree with the headline because we raised our forecast for the fourth consecutive quarter, which basically is driven by the momentum we have in our strategy, which is all about secure connectivity, cloud, and data insight. And this new way to work, Emily, actually has accelerated our portfolio to become that edge-to-cloud platform we have been talking for some time. So we saw very strong demand across the entire portfolio with double-digit growth in our order momentum, which allows us also to expand our margins. We did a great job in driving pricing and the right mix to deliver record-breaking gross margin and record-breaking year-to-date free cash flow. So we are very encouraged, and the momentum gave us the confidence to raise once again the forecast on both EPS and free cash flow, and we will continue to drive growth in our revenue top line here in the next few quarters and navigating through a challenge of the supply, which is obviously is going to be here for some time. But we have taken mitigating action across the inventory, and our engineering team is the best in class to swap components where is availability.
Talk to us about how you see the supply constraints playing out. I mean, do you think the chip shortage and other shortages of component parts, will that ease up by the end of the year? Is it going to be a couple more years of this?
No. We think it's here to stay for a couple of more quarters, maybe 2 to 3 quarters, and then we'll ease it up. Obviously, our suppliers are taking their own actions to increase capacity, to build new fabs. But at the same time, we are taking our own actions. And that's why all our new guidance, again, the reason the guidance factor all this in. And so we think this is going to stay here for 2 to 3 quarters. But on the demand side, Emily, we see no impact whatsoever. In fact, the demand has never been this strong. I'm very bullish about the momentum that I think will continue into the 2022 IT spending cycle. And more customers are consuming everything we offer as a service, to your point, becoming more a subscription and consumption-driven company.
Compute shrank while Dell was able to grow there. Why do you think that happened?
Well, we actually, if you normalize for the Q3 2020 backlog, as you recall, in 2020 with the disruption of COVID, we actually shipped almost $500 million incremental revenue in Q3 2020. If you normalize for that, our compute growth would have been 17% year-over-year growth. And remember, we segment compute or the server category into two major segments. One is the general purpose compute, and the other one is high performance computing. And that business for us continued to hum in the way that we see in the market with the AI, deep learning, machine learning, which grew also 9%. So you have to look at our performance with a combination of both compute and HPC. And that momentum is giving us terrific growth that we are going to see in the quarters to come. And remember, we just announced a very large deal with NSA where we signed a $2 billion deal that we're going to start shipping here in the next couple of quarters.
Huge deal indeed. Let's talk about your plan to convert customers into subscribers. What makes you so optimistic you'll be able to do that?
Well, customers want a cloud experience everywhere with an elastic model, meaning pay as you go. And for that, they don't need to go always to the public cloud. We can bring the cloud to you. The cloud to you, meaning on your own premises, in your own data centers, in the co-locations or at the edge. And with our HPE GreenLake cloud offering, we are meeting those needs better than anyone else. And you can see that in our results. We added 100 customers this past quarter. We have now 1,100 customers since the beginning of this offer. Our total contract value now exceeds $5 billion. And last quarter grew 46%. And the way we report our momentum to the street is through the annualized revenue run rate, which also grew 33% and now in excess of $700 million. And we have a phenomenal pipeline. And the reason why we are winning that space is because we have the software to deliver against that experience. And GreenLake now is the alternative to the public cloud for those workloads that need to stay on-prem with big data intensive aspects associated with that.
All right, Antonio Neri, CEO of HPE. Good to have you back on the show, and thanks for walking us through some of those trends. Meantime, Tesla's Cybertruck reportedly is about a year behind schedule. According to the blog Electric, the truck is now expected to start production at the end of 2022 and won't be made in volume until late 2023. Tesla CEO Elon Musk is said to have told employees on a company-wide call that production will be complicated by the amount of new technology in the vehicle. We'll have more of Bloomberg Technology after this quick break. This is Bloomberg.
It was a materially lower number.
It's a weaker report.
The first read is definitely this has some Delta variant on it.
This is the long game right now coming out of a worldwide pandemic.
There's one huge red flag for me in this payrolls report.
The hospitality number and the restaurant number.
0 jobs were created in leisure hospitality.
We had almost 0 gain this month in that area.
You'll get some bounce back here in September.
The market's looking through this and seeing, hey, this is temporary.
Tapering is still very much on the table.
The Fed is going to taper.
The market is now pushing back any sort of Fed taper announcement to November, maybe December.
They don't need to rush into it. And the most important thing not to lose sight of here is the emphasis that tapering is not tightening.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Just a few of the guests we've had on Bloomberg Television today reacting to the slowdown in hiring and what it means for the Fed decision on tapering. And as some of those folks mentioned, the hospitality sector and restaurants in particular were hit hardest in the last month. Bloomberg's Kriti Gupta back with us now to see how those numbers are impacting tech companies that rely on the industry. Kriti, what are you seeing?
Absolutely, Emily. Well, first I want to just visualize that, because if you look at the labor market recovery in the last couple of months, it was driven by those leisure and hospitality jobs. You can see that here. here. The white jobs, leisure, hospitality, the blue line, the overall numbers, you can really see they were leading that. So to lose that momentum, well, it's really a problem. To just kind of talk about how it translates into the stocks picture, let's just take a look at some of those food delivery apps. You saw that immediately extremely exposed to that restaurant business, now down. Grubhub, Uber, but also some of those travel stocks, Expedia, TripAdvisor, a lot of those leisure hospitality. But Emily, let's end on a fun note. When you talk about that social scene, talk about restaurants, to me, that reminds me of dating apps, Bumble, Match Group. Those were actually doing pretty well. People still socializing, and it doesn't look like it really hurt that investor base case. And I want to end with some news that we got just a couple of minutes ago. Match Group now joining the S&P 500. Emily, something to watch in terms of the bigger market moves.
All right, Kriti Gupta, thanks so much for that roundup. Meantime, shares of DocuSign are at a record high. The e-signature company reporting better than expected second quarter results, raising its forecast as a sign of optimism over the future of work and business in these current uncertain times. Joining us now, Dan Springer, CEO of DocuSign. Dan, great to have you back here on the show. So here's my question. How much growth, or how many years of growth do you think happened in 1 year or 18 months of this pandemic? Obviously, a trend toward e-signing was going to happen at some point, but it probably would have taken longer. How much of that do you think was compressed into the pandemic itself?
I think it was meaningful. If you think about the fact that over the 6 quarters, we doubled the size of the business. And even though we're a high growth business, as you know well, Emily, we probably wouldn't plan to double every 6 months. So we think we had a fairly significant increase to our growth rates. And even if you think about Q2, which we just announced, we had 50% revenue growth, 52 on the subscription side. And whereas traditionally, we've been more in the high 30s. So I think you can see there's a meaningful piece. And we now think we've come out of that sort of heavily COVID-induced growth and getting closer to what the new normal will look like.
I mean, the way I think about it, it's like, thank goodness that we're signing these things electronically and that is now so much easier. But of course, the big question is, can you keep this kind of growth up post-pandemic? How does that trend?
Well, if you take a look at what we provided for guidance, so Cynthia Gaylor, our CFO, put some pretty strong guidance for the second half, even though we'd had this very seasonally strong first half. So I think we're quite bullish on the growth opportunity ahead. And I think the core reason behind it, and the reason we have the optimism, and I think the market is seeing it, we have a very significant TAM. We're in a very strong competitive position. And to date, touch wood, we've been executing really well. Team DocuSign has really stepped up to the opportunity. And so I think the expectation is all three of those things are going to continue.
So DocuSign is, of course, known for its e-signatures, but you've expanded into other areas. Talk to us about where you're seeing the most traction.
So to be clear, e-signature is where it starts, right? E-signature is what brought us to this dance, and we wouldn't be doing over $2 billion of revenue this year if it weren't for e-signature. At the same time, our customers, and we are fundamentally a customer success company, have come to us and said, before the signature, as we generate agreements, and after the document is signed, is we have to manage those agreements and search against those agreements and run our business better from the information that we can elicit from those agreements. That's where we want you to go. And that's what the DocuSign Agreement Cloud fundamentally is. And we're building out that functionality, both the pre and the post signature, so that we can deliver a more fulsome solution and help our customers really run their businesses better.
You have over 1 million customers now, as you said. What are the needs? What are the demands that you're seeing as the pandemic drags on and we move towards some sort of new normal, which still seems so far away?
Yeah, we like the new normal too. I just wish we could get here a little faster. I think the way to think about it is during the pandemic, we had a lot of our customers that were sort of in survival mode. In fact, I just had a conversation with a smaller insurance company called Down East Insurance, and their CEO told us, she said that if it had not been for DocuSign, when they had to close their physical doors because they couldn't operate physically anymore, they probably would have to close their doors. Over half the business that they did was driven by e-signature in the year post-COVID hitting. And now they're saying, that's fantastic, but how do we take our digital transformation to the next level? We've done the basics, but let's look at the rest of our business and the rest of the opportunity. That's where we see the growth. We see big customers the same way. Commonwealth Bank of Australia, another great example, where they're a big customer of DocuSign, been successful for a while. Coming out of the pandemic, they grew their volume 175% with us. So I think that's where we are now, where people are saying, we got our toes wet. We saw the benefits that you articulated and see in terms of ease of use and the speed to getting things done faster and better. And now we want to accelerate that through the rest of our business.
You're a San Francisco-based business, Dan. I've been to your office, beautiful office space. How are you thinking about the return to work for your own employees? We've seen companies like Coinbase give up their headquarters altogether, go fully remote. Other companies are downsizing. How are you thinking about this?
So with great frustration right now because of the fact that I can't be in that office just a couple of blocks from here. I think the reality is we think that the new normal for us will be different, but it won't be dramatically different. Our philosophy is that we think part of what makes our culture great is the interaction that our employees get to have with each other. And some of that we believe needs to be in person and it's going to occur in our offices. So we're not getting rid of our footprint. We will probably grow our footprint a little more slowly than we had in the past because a lot of our workers are going to come with less frequency. So we're going to have less sort of like dedicated desks and more of people hoteling. And so it probably means we'll grow a little bit more slowly our office footprint, but basically it's the same thing. We're going to ask our employees for the most part to come back into the office because we think that's going to allow them to have better career growth, for us to have better sort of innovation in our business, and then allow us to serve our customers at the optimal. So that's how we think it's going to play out.
All right. DocuSign CEO Dan Springer, thanks so much for sharing that with us. Good to have you back here on the show. Okay, coming up, with the threat of wildfires in California getting worse every day, our next guest built a robot that could potentially help fight the next fire faster and save homes and even lives in the process. That's next. And as we head to break, let's take a look at how shares of F-45 training have performed since going public in July. The company, backed by actor Mark Wahlberg, has been expanding, including putting facilities in U.S. military bases. They're also funding military veterans to start their own F-45 franchises. Wahlberg joined us earlier to talk about the program. This is Bloomberg.
You know, these guys, brave men and women, are more than capable of being multi-unit operators, operating 4, 5 to 10 studios themselves and really having a very, very lucrative career.
Let's get an update now on the fires burning in Northern California. And as the Salvador fire rushed towards Lake Tahoe, California, firefighters hacked down trees and even used snow blowers to stop it in its tracks. Now it is a heart-pounding waiting game to see if it will break through. Joining us now, Bloomberg's Mark Chediak, who's been covering the fires for Bloomberg. So, Mark, what is the latest? Will Lake Tahoe be saved?
Well, firefighters are really optimistic, how they describe it is cautiously optimistic that they'll be able to protect South Lake Tahoe from the fire. The weather conditions have improved quite a bit over the last 24 hours, and they're expecting much calmer winds over the Labor Day weekend. So they are quite hopeful they'll be able to keep the blaze out of the resort town. The improving conditions have allowed them to build these fire containment lines around the city ahead of the fire. Some of these lines are like as wide as a highway. They use these bulldozers and hand crews that basically chop away at trees and brush to protect this urban environment. So things are looking much better than they did 72 or even 48 hours ago.
Now, we're going into Labor Day weekend when you would normally see Lake Tahoe teeming with visitors, with residents. There are also a lot of people who live there year-round. I mean, would you say we're out of the woods, no pun intended, or is this still a very, minute-by-minute, hour-by-hour situation, given how dry it is and how warm it is?
Yeah, that's a great question. And no, they don't think they're out of the woods, as you say, yet. Fire officials don't expect to lift evacuation warnings for South Lake Tahoe over the Labor Day weekend. They're not giving exact timing on that, but they do think they might be able to let people back sometime next week, although they said it could be later than that. It really depends on how well they are able to put out some of these spot fires that have been popping up around the area and really get a sense of whether or not the fire is truly contained. But yeah, it is going to be an economic hit for South Lake Tahoe. This is one of the busiest times of year for the resort area. Somebody with the tourist association there told us that it will hurt some businesses.
All right, well, our hearts go out to everyone who lives there and the heroic efforts of those firefighters. Bloomberg's Mark Chediak, thanks so much. With so many wildfires burning in California, it becomes difficult to know when they will initially start. Our next guest created a bot that tweets out real-time information about wildfires based on California Highway Patrol reports. It shows the location, the exact police report, and a link to the location of where the fire was spotted. Joining us now, Bennett Kedrosky, creator of the CAL FIRE bot. Bennett, thank you so much for joining us. I should mention, I believe you're just 17 years old, so quite the invention from a teenager. Talk to us about how CAL FIRE bot works.
Yeah, so most fires in California are first spotted by motorists and police officers who will report it to the California Highway Patrol. And so this Twitter bot gathers the information from the California Highway Patrol report and then will tweet it out in Twitter, and it will show the area of the fire, the police report, and a link to the fire. Like where the fire was spotted.
How many fires are burning in California right now? What is the bot telling you at this moment?
I would say there are about 100 fires right now, because every single day the fire bot will tweet about 100 times. And I mean, it's just incredible because with 100 new fires every single day, it's just very difficult for the fire department to be able to keep up.
Now, to your knowledge, has the bot helped firefighters, first responders find out about fires faster in any situation? As I understand it, it flagged the Dixie Fire, which is a huge fire in California, was one of the first to identify that fire was even happening.
Yeah, this bot is usually the very first resource to spot a new fire because of the way that it gathers information, which is through the California Highway Patrol. And so, I mean, this bot can be not only useful just for people who are worried about being caught up in a fire, but also for the fire department who can be warned about possible fires.
Have you heard from the fire department at all? Is the fire department watching your bot or paying attention?
Yeah, I was contacted by my local fire department, and they were really, really appreciative of this bot because it has been very helpful for them.
What's your expectation for the rest of fire season, given how the bot is trending? As you say, 100 fires in California today and kind of almost any given day during fire season.
Yeah, so the past 2 months, it's been very consistent at 100 fires. So I'm expecting as this fire season continues, it's going to stay at that number and maybe even increase a little bit.
Okay, well, we'll keep watching. And I have to ask before we go, since you're just 17 years old, how did you do it? How do you create a bot that can identify fires across such a large state?
Well, it's just a program that just runs constantly and constantly. That's looking through the CHP reports. And I guess this all kind of began when I was in Mammoth last summer with my family. And there was the creek fire. And the smoke from that fire blew into the town and it just caused problems for everybody. And that kind of sparked my interest in wildfires. So since then, I tried to create a way to share information about wildfires as they appear.
Wow. Well, thank you for sharing it with us as a resident of the state of California. Bennett Kedrosky, creator of the CAL FIRE bot. Okay, coming up, we visit the Central American beach town, riding the Bitcoin wave as a new law gets ready to go into effect. That is next. This is Bloomberg. Let's take a look at some events happening next week. Tuesday, El Salvador becomes the first country to make Bitcoin legal tender. That's when Salvadorians will also be able to download the government's digital wallet, enter their ID, and receive $30 in Bitcoin. Then Wednesday, opening statements begin in the trial of Elizabeth Holmes, the former CEO of the failed blood testing startup Theranos, who's charged with defrauding investors and patients. Thursday, we'll get earnings from the buy now, pay later company Affirm. We're likely to hear more details about the company's partnership with Amazon to help consumers split up payments of big purchases. And let's get more now on that new Bitcoin law in El Salvador, set to take effect next week. The Central American country has already been experimenting with cryptocurrency in a tiny beach town. This report from Bloomberg Quick Take.
Welcome to El Zonte, known as Bitcoin Beach. This little surf town on the coast of El Salvador is one of the first to go full crypto. Yep, you heard that right. Everything from groceries to coffee to salaries and community projects can be paid for using Bitcoin.
It's actually been crazy how fast it has caught on and how useful Bitcoin's been for everyday people.
Just to buy something as simple as a cup of coffee can be done quickly, painlessly.
The town of 3,000 has never had a bank. Now their only ATM buys and sells Bitcoin, and nearly 90% of households interact with the currency regularly. Since this video was shot, El Salvador has become the first country to accept Bitcoin as legal tender.
Next week, I will send to Congress a bill that will make Bitcoin a legal tender in El Salvador.
But how did El Salvador, a country where 70% of the population is unbanked, become the first country to use Bitcoin as legal tender? Mike Peterson, one of the leaders at Bitcoin Beach Project, says it all started in 2019 when an anonymous American donor got in touch through their evangelical Christian church.
The donor wanted to remain anonymous. He didn't want any credit for things. He wants to see Bitcoin used in real ways. He doesn't want to give to organizations that are just going to convert it to fiat. And they as an organization really believe that most of the benefit of what they're trying to do would be by seeding Bitcoin economies throughout the world.
That's when Peterson drafted a plan to create a Bitcoin economy and recruited a small staff of El Zonte residents.
We had a timeline, and we're at like year 3 right now when we're only halfway, 18 months into it. Part of that was kind of sped up by the pandemic of all things.
When El Salvador's tourism industry and El Zonte's economy collapsed, Peterson started making monthly transfers of about $35 in Bitcoin to 500 families around town.
During that time, people couldn't go out of their homes to work. A lot of people were starting to go hungry. And so we kind of used some of the resources we had to start sending Bitcoin to the majority of the families in El Zonte and teaching the stores how to accept Bitcoin, which helped the stores to be able to stay in business and keep their employees on, but it also allowed the people to remain fed.
Maria del Carmen, the owner of a tiny pizza eatery, says she was skeptical about storing money on her phone. Now, Bitcoin accounts for as much as half of her roughly $45 a day in sales.
Y luego fui viendo la ganancia de Bitcoin. Y ahora pues siento de que la moneda virtual es algo pues muy efectivo. Y por eso yo pienso de que las personas que no conocen de Bitcoin deberían de empezar a ver si pueden intentarlo también como lo intenté yo.
Enzo Rubio, owner of Breakpoint Cafe, never thought twice about crypto until his customers asked him about it within the first week of his opening.
And he showed me the app. We downloaded it. In 3 minutes, I had the app, the wallet in my phone, and he paid me my first cappuccino on Bitcoin.
Shops in town price everything in dollars. Whether the underlying transaction is in Bitcoin or not, a cappuccino always costs $3.50, even if Bitcoin's value has just jumped or dropped. In this way, it behaves more like a token than a currency.
What was in my mind at that point was, what am I going to do with it? Am I losing my money? Did I give coffee for free? And now, whatever I get on Bitcoin is I keep it as savings.
That brings the risk of volatility into play.
Obviously, Bitcoin has been trending up during the time of this, the project, and we understand that might not always be the case. But we found that people actually, they learn really quickly how to ride volatility, how to adjust, how to think, which funds am I putting aside for 10 years where I'm not really worried about it, which funds are for next week, so I need to move it into dollars to be able to make a dollar-denominated payment. And it's actually been much less of an issue than we initially anticipated.
Although locals were skeptical at first, many feel saved by the implementation of crypto in their community.
O sea, el Bitcoin ha impactado mucho al Zonte y la verdad que ha generado bastante empleo también para muchas personas locales.
Nosotros contamos con nuestros dineros en nuestras manos, nuestros teléfonos, y es mejor.
Y hasta el día de ahora Bitcoin está cambiando la vida de muchas personas en diferentes áreas como educación, deporte, economía, espiritual y nada, una comunidad muy cambiada.
A todos, sin restricción de nadie, a toda la comunidad se le dio víveres y gracias a eso yo siento que ha cambiado la vida de los habitantes de acá del Zonte.
El Salvador's Bitcoin law will come into effect on September 7th.
And that does it for this edition of Bloomberg Technology. Stay with Bloomberg for Wall Street Week. My colleague Romaine Bostick will be joined by former U.S. Treasury Secretary Larry Summers, Carlyle Group co-founder and chair David Rubenstein, and Alpine Woods portfolio manager Sarah Hunt, as well as Double Line's Ken Shinoda. We're off Monday for Labor Day, so we will see you Tuesday here in the U.S. I'm Emily Chang in San Francisco. This is Bloomberg.